Welcome to Sonnet, the money-saving Chartered Certified Accountants. I'm Tim Burton. Today we're going to talk about inheritance tax, and this is part one of one or two videos that we'll be putting out because it's such a complex area. So what is inheritance tax, or IHT as accountants like to call it? It's a death tax payable on your estate when you die. And it's one of the highest levels of tax at 40% typically. It annoys many people because it can require selling assets, maybe things that you cherish as a family, even loved ones moving out of the family home in order to free up the cash to pay to the taxman. And it annoys me because it's a tax that, with the right planning, if you pass on the right inheritance, it can be tax-free. So what is your estate? It's basically everything that you own, what you are worth. And this is the first step to good IHT planning, knowing what you are worth and where the money is and what the potential IHT bill will be. Now, say potential because obviously nobody wants to die, generally speaking. But it's when you die, it crystallizes, and that's it. There's very little that you can do to reduce or mitigate the IHT bill. How can you know what you're worth? It's not as difficult as you think. Start with the biggest item, your house, if you own your own home. And that's usually the thing that takes you over the inheritance tax threshold. You can use websites like Mouseprice or Zoopla to give you a rough idea. They're not the greatest, but remember, this is a hypothetical exercise. So we just want a rough idea as to how much your house might be worth. But don't forget, you need to count how much the contents of your house is worth as well. Hopefully looking at your home insurance, if that's suitable, then the contents insurance for your home will give you an idea as to the valuation of that. But remember, there's some very nice furniture and musical instruments and rare items. People often undervalue what's inside their house. The next biggest asset that people usually own is their car, if they drive. You can find the valuation of that on your car insurance document, hopefully. Then you've got all other assets, shares, investment property, whatever else you might have, savings in the bank, all of these things. You can hopefully find a place where you can put your finger on a valuation. But don't worry if you can't put your finger right on it. Remember, this is a hypothetical exercise, just trying to add up and get a rough idea as to what you might worth. It will change in the passing of time anyway. One thing that people forget often is jewellery. That can be worth a huge amount of money, even though it can be quite a small item. So don't forget that. You do take off, though, from your estate what you owe. So any mortgages, any loans, those are the things that you take off your estate. It's the net value once everything's paid out. It does get a little bit complex, though, because you may have to include anything that you gave away within the last 7 years. And this is where you need good planning. But as a rough idea, add all those things up and you'll get to a value of your estate. So can you avoid inheritance tax? HMRC are often the biggest beneficiary of an estate that hasn't been planned well from an inheritance tax point of view. And you want it to be your loved ones, not the taxman. With the right planning, it is an entirely optional tax. So in part two, we're going to look at who pays inheritance tax. We'll look at a worked example as well, and then consider some of the simple planning opportunities that you have for inheritance tax purposes. So in summary, inheritance tax is payable on the value of your estate when you die. It's a complex area of taxation, but with the right planning, you can ensure that you give your loved ones more than you give to HMRC, but only if you plan things before you die. Of course, here at Sonnet, we have an inheritance tax service reviewing that, helping you, holding your hand through that process. and making sure you get the right planning advice. So get in touch. It could be the best investment you ever made. You can find more information on our website, sonnetaccountants.co.uk, and various social media platforms. But for now, thanks for watching. This is Tim Burton from Sonnet, the money-saving, chartered certified accountants.